zone, so we're still within the comfortable zone, although it is 11 is on the higher side of the comfortable zone. We have to be wary of that. We have Mr. Amit Gupta, founder of Fintra Capital, now joining us live on this broadcast for more. Amit, what a day of trading on India stock markets, as Suyash was talking about. A great reversal, 595 point climb on the SENSEX to be precise, and Nifty about the 19,400 mark. Even as the SENSEX was close to hitting the 65,000 peak.
Suyash, I'm not able to hear. Can you repeat the question, please?
Right. We were just asking about the broader markets and the performance today. Nifty was so close to beating, getting into that 65K territory. Nifty closed above the 19,400 mark. A great day of trading for India stock markets, even as both the mid cap and the small cap too saw significant gains.
Yeah. So I think the last last month decline, it was quite fast and furious. So we were expecting a technical bounce back till about 19,450, 500 kind of levels. So we have seen that bounce back, but it will be interesting to see, how market sustains from here. My sense is there is a very strong technical resistance in this area around 450 to 500. And we could see a pullback from here. The good thing is that, the companies which are delivering earnings as per expectations or slightly above the expectations, these companies are actually seeing good gains on the stock markets. Even the Nifty small cap index actually hit a new lifetime high in the today's session. So my sense is still, given how the US is placed and given how the Indian macros are placed at this point of time, given we are going to have an election season starting very soon, my sense is that there will be a lot of volatility in the markets on both sides, and the overall market texture will remain stock specific.
Now, talking about volatility, Krishna, I mean the factors, as Amit also pointed out, most of them were global. In the last couple of days, the sentiment has sort of reversed in the global markets as well. Dow Jones surged about 5% last week. S&P had its best weekly run in almost, a year?
Yeah.
Right?
Yeah, especially after the US Fed stance of not hiking interest rates and those great corporate earnings in the US. So Wall Street already triggered off a rally on Thursday, Friday last week. It's in fact poised for an even longer rally is what they say. Amit, how do you see that Indian stock markets taking cues from that, say, come tomorrow morning? Because, we'll have the first trading session of the week on Wall Street tonight, India time.
Yeah, so I think, the US markets were actually pretty oversold. If you look at the Russell 500, the small cap index there, that has been at a 52-week low. So markets there in US were actually very oversold, and given how the earnings, given how the FOMC meeting panned out last week, where they sort of put it on hold, and they will move only if there is a very strong inflation rise. So my sense is, we are not going to see a move by the Fed there for some time to come. On top of that, on Friday, we had the NFP, data also, non-farm payrolls, which also suggested that, some sort of slowdown is happening in the US economy in terms of jobs. So the markets have bounced back pretty strongly. Again, like the Indian markets, the US markets are also at some sort of technical resistance at 4350 kind of levels. So it will be interesting in the coming week to see if these resistances are closed. Otherwise, it's likely that we are going to see a pullback in the markets.
Hi Amit, Suyash. The three factors that everyone has been talking about in the last couple of months or so, I mean they have also improved, and overall outlook for global equities also seems to have improved. I mean the US 10-year bond yields, which was around 5% sort of levels, has corrected by about 40 to 45 basis points, and it is currently hovering around that 4.5 sort of levels. The crude prices have actually retraced quite a bit. It's currently hovering around the $85, which is the pre-Israel-Hamas conflict levels. The dollar index is also at a 2-month low. So given all of these factors, do you expect, I mean, you just mentioned that you expect some sort of a pullback from these levels. I mean, the global setup is looking rather positive, Amit. Why do you expect this pullback?
So I think we are still playing the ranges. Whatever you have mentioned, whether it is crude. Now, since the Hamas-Israel war is not accelerating in terms of more attacks, the crude has sort of softened a little bit. It is still playing the ranges. The fallback in the US 10-year yields is also again due to the dollar index falling, due to the expectation that economy is slowing down and there could be a recession-like conditions in the US in the coming year. So all that has led to dollar index going down and we are seeing some inflows. But still, if you look at the bigger picture, especially the technical picture, it is only playing the ranges. We have gone from 19,500 to 18,800, and we have come back to 19,400 sort of levels today. Same is the case with the US. It has fallen about 7-8%, and it has bounced back the same level. So my sense is, we are still playing the ranges. We are not really, crossing those resistances. And given, the news flow, given the headlines, and given how the market is positioned at this point of time, I believe we are going to see some volatility before we pick one position, either on the upside or the downside.
All right. All bets off the table, looks like, as far as Amit is concerned. Amit, stay with us. We're talking a lot of macros over here. I thought let's turn this around into some micros. Let's zoom in on the Zomato stock, for instance. Suyash, what a year that the Zomato stock has had.
What a year, Krishna. It has turned multi-bagger today,
Wow.
I mean, since the last 3 days, I think it rallied on Thursday about 4%, Friday about 6%, another 6% today. So it's been on a tear. I mean, in 2023, it's given returns of about 102%. And we know the results were clearly outstanding. A big improvement on a quarter-on-quarter basis. In fact, it has turned profitable. Now, many organizations will tell you it turned profitable last time around, but as we had,
but that was a tax adjustment.
Tax adjustment that because of which it had posted a profit last time around. But this time around, finally, the company has turned profitable, and we are seeing a good bit of growth across all its verticals. Sequentially, the all 4 segments, all 4 contributors, its dine out business, its food delivery business, its B2B business, all have seen double-digit growth. And I mean, I was also looking at some of the brokerages reviews over here. Amit, I mean, the highest target price as per brokerages is 165, which implies an upside of around 30%. I mean, is this sort of exuberance justified? Clearly, the company is doing fairly well. The outlook is optimistic. But after a 100% run up, another 30% upside, is that reasonable?
So these, brokerage estimates move on both sides in a similar manner. When it was going down, then there were lower and lower targets. Above, targets are revised higher. But what we need to understand here is the business. Obviously, clearly now there are only 2 players in this industry. We also need to understand that it's a strong, seasonally very strong, quarter for them, given the festive season, and on top of that, you have Cricket World Cup as well. So there is the number of orders which are coming in has really shot up. I still think that they are some time away from actually attaining the profitability. The Blinkit vertical is still making about 1,100 losses, 1,100 crore losses even in this quarter. So my sense is that it will take some time before the business actually stabilizes towards the profitability. But no one can deny that the potential for this business is quite huge if you have a long investment horizon. Eventually, I think about only 1.5 to 2 crores are customers are there. The scope of actually getting more customers on board for this business is quite huge. And given that there will be probably no strong player coming in as a third player, this could become a duopoly industry, and we could see some sort of very strong up move on the upside. But in the short term, my sense is that the moves have been pretty significant. There have been a lot of institutional buying which is seen. That could sort of slow down because it's now back to the listing price. Slightly above that, it got listed at 115. I think it closed at around 123, 24 today. So we could see some sort of selling coming here. But even though I'm skeptical about the short-term moves, the long-term story for Zomato looks pretty good. If one has a 7 to 10 years kind of a view.
All right, 7 to 10 year kind of view. Amit, while we're talking about the World Cup, it's beautiful, isn't it? It's the butterfly effect. One day World Cup gets more interesting. People start watching one day World Cup, Cricket World Cup more. So they're watching more, so they order more. And because of that, the sentiment with Zomato improves at a time when their quarterly earnings report card also comes out positively, and it all adds up to the stock and the sentiment with which people are buying the stock. And you're seeing that run up with every possible day. With every Indian victory, I'm guessing Zomato stock is gaining another 3-4%. But we will take our focus away from the Zomato stock and put it on another set of quarterly earnings that came out after Zomato. That is Divis. Divis, despite disappointing the street, the stock was up on trade today, wasn't it, Suyash?
Yeah, very interesting there. This, as you mentioned, Divis has disappointed the street. It came below the street expectations on the profitability front. EBITDA and margins were also subdued. Now, let's look at the broad figures first. We'll talk about the stock later. So, net profit for the quarter came in at about 348%, which is about 29.5% of the year ago period, and about 15% shy of our estimates. Revenue on the other hand was up about 3%, coming in at 1909 crore. It improved from around 1800 and 545 crore some levels, whereas it was about 1% higher than what the street was expecting. EBITDA on the other hand was about 23% lower than the year ago period, coming in at 479 crore in this quarter. Margins also contracted sharply by about 840 basis points, or 8.4%, coming in at 25.1% versus 33.5% in the year ago period. Let's talk about the stock now, Krishna.
Right.
Divis, after the stock initially was trading with moderate gains before the results came out. After the results, there was a sharp decline in the stocks, in the stock prices, and it moved in the red territory. However, the stock also saw a sharp rebound, and by the day's end, it ended almost, I think, 5% higher and was a top gainer in not only Nifty Pharma but Nifty as well. Overall, however, the stock has been an underperformer. On a 1 month basis, it's down about 5%, whereas Nifty Pharma is flattish, down marginally. On a 6 month basis, it's up about 7%, whereas Nifty Pharma is up about 19%. On a year to date basis, Divis has given returns about 4.5%, whereas Nifty Pharma has risen about 20%. So, I mean, Amit, my question is simple. The results were below street's expectations. The stock, although, ended as the day's top gainer. What's going on there?
Yeah, so I think the estimates were lowered in any case, after the last quarter commentary. So aside from a sort of an unfavorable base, because remember last year the prices really went through the roof because of Russia-Ukraine war. I'm talking about the raw material prices. So most of the analyst estimates had actually anticipated a softening of the overall active pharmaceutical integrated, that is API prices, to basically weigh on these quarter results. But I think after that initial disappointment, which also saw the stock reacting negatively about 1.5%, they had a con call at 2 p.m. And they actually, gave a positive commentary and guidance about the next 1 year. The key segment in custom synthesis that is doing very well. The couple of projects which they are doing with the big global MNC pharma companies, they are now operating at full scale. So one expects a bump up in the revenue and margins going ahead. Apart from that, they recently have a US FDA visit in one of their facilities. and that went quite well, even though the final observations are not out yet. But the management has guided that they were quite pleased to talk about the API industry, and they don't expect any negative surprises there. Apart from that, the pricing pressure in generics might continue for some more time, but that's an industry problem, not specific to API, not specific to Divi's lab in the API space. There was some rise in the end of the September quarter in the API prices of most of the companies, including Divi's. But October starting has seen some dumping from the Chinese counterparts. So that price, which was increased by 5 to 7%, that has sort of reversed. So my overall sense, listening to the con call at 2 p.m. today, was that going forward, one can expect that revenues and margins are going to improve. And I think market sensed that. That's why stock also reacted towards the day's high and ended as a top gain.
All right. Amit Gupta there, founder of Intra Capital, helping us understand the goings on in today's trading session on India stock markets. Amit, thank you so much for taking time out to be with us here on Last Tick. And with that, it's a wrap here on Last Tick from Suyash and my side. But don't go anywhere. We'll be back with Business Plus on the other side. Keep it with News 9.